Quint.
Hello and welcome. You're watching Countdown right here on Bloomberg Quint Live. The market share continues into the second day of the week as well. You've got all the indices up and about in the green, with the Bank Nifty now just a smidge away from its lifetime highs. We'll talk about all of the moving parts of the markets in just a few moments, but the headlines for the time being. Markets are off the day's high but continue to trade with gains. The Nifty trades above the 11,250 mark. All sectoral indices trade with gains. Bharti Airtel continues to remain the top gainer on the Nifty for the second straight day. The stock has now gained over 12% in 2 trading days. And Dr. Reddy Labs seeks over $70 million in compensation from Endeavour for the delay caused in Suboxone launch. The stock is trading with gains. And Reliance Industries is up for the second straight day. The stock is trading at a 52-week high. Good afternoon, Neeraj. The markets, the cheer continues, and the banks are the center of attention this afternoon, whether or not it does manage to make a new life high.
Yeah, about 50 points away. Well, the bulls will argue that if it doesn't happen today, might well happen tomorrow, because the going is looking really strong for markets by and large. Just before we move to our markets, some key points. One, what the rest of the Asian pack did today, what Europe is doing right now, and what the Dow futures are up to as we speak. So firstly, this is what Europe is doing. FTSE has, well, things of its own. This week is an important week. Theresa May has secured a deal, but whether or not the Parliament, the UK Parliament, will pass it is a separate question. So FTSE would have issues of its own by and large. Otherwise, seems to be an okay place. The rest of the European pack. The Dow futures will come up on your screen after a really strong show yesterday. Not as much by the Dow as S&P and Nasdaq, but Dow too about 0.8% in the green yesterday, and still starting off okay. So the world markets are looking a bit sanguine. Let's see if we continue to move up higher. Our markets and the market breadth has looked okay today, but let's get the heat map up on the screen to show you the Nifty 50. This is the broader market breadth, and while it's contracted a little bit, still well above 2:1 in favor of the advances. Now, what's happening in the heat map? And again, pretty similar. You would have some stocks moving into the red, yes, but otherwise, the top loser, Bajaj Finance, is still down less than 1%, and the gainers, Bharti once again top of the pile, IndusInd Bank, L&T, ICICI Bank. So banks certainly right up there. Z Entertainment recovers some bit of losses, and commodities by and large seem to be looking okay. Vedanta, for example, up about 1.5% in the session. For that too, Reliance Industries 1.5%. So selectively those stocks seem to be doing okay. The breadth, maybe not as impressive as yesterday, Devina, but still 2:1. I don't think there's too many causes for complaint.
It's a steady gain, so I mean, and that's more reliable than just volatile daily swings that we sometimes land up seeing. But definitely, today's session is a bit more calmer than in terms of what yesterday's session was. For the mid caps and the small caps, we were almost under 1% in terms of the kind of gains we've seen. Individual stocks, though, once again gain attention. HDFC Life on the offer for sale is down about 4%. The morning session was down closer to 5% as it opened up for trade. Manpasand Beverages, that's a stock that's up the second or third day in a trot, 16% in today's session. A lot of volume action kicking in on the counter. Jet Airways denying that they received any additional funding from Punjab National Bank. They already have a line of credit to the tune of about $300 million. So that stock just about in the green. Other movers in trade, Bombay Dyeing is up heavily. GMDC on the auto win is up about 6.7% in intraday trade. And Indo count, second straight day in a row, you've got 9% gain coming in on that counter. Stocks on the back of volumes, you've got Syntex Plastic. The stock makes its big move in today's session. We've not seen the stock make these kind of moves, at least in the recent past. Today's session sees volumes of about 61 lakh shares. Then Networks moves up. KC International too, on the back of 12.5 lakh shares, has moved up in trade today. 52-week highs in stocks that are trading near it. You've got Gujarat Fluorochemicals at stocks trading near its 52-week high, up 2.5%. Havells, I think, 1% away from its 52-week high. And Ipca Labs is just about at its 52-week high at 930 odd. So going to watch out for all of these stocks very closely in trade today. But what's happening in the futures and options space? Agam Vakil is joining in for that. Agam.
Yeah, well, it's been another great day of trade, at least for those who are long in the markets, considering the up move that we've seen on the Nifty. It's at well above 11,270, another 10% added in open interest towards fresh longs. Is that the case for the Nifty banking futures too? Well, 19% added here, and this is after a subdued increase of open interest yesterday. So we're certainly seeing that surge come in today. The VIX has advanced by around 1%, but this is largely on account of the fact that we've seen such a sharp up move in the benchmarks. It's the underlying. Now, this is where we've seen most amount of traction, that is the 11,200 put, and not surprising considering the Nifty is considerably above that level. And with that, we move on to three stocks which are on my radar. Escorts is up 7%. It's added 26% in OI, so a lot of longs there. That's followed by Ajanta Pharma, another one from the pharma pack, also seeing a lot of buying and fresh positions being taken. And the final one on the list is DLF, along with the rest of the realty players up and about in trade, another 8% added here as well. So watch out for these three stocks, but we've seen gains all around, considering significant longs in both the benchmark indices as well.
Right, Agam, thanks a lot for that. That's a quick F&O wrap out this afternoon and what's happening in the more liquid universe. Bringing in an important market voice then to talk a little bit more about what's been currently happening, as well as what are the future opportunities that entail. We've got Sindhu Samir. He's the co-head of equity sales at Emkay Global Financial Services. Thanks very much for joining us. Sindhu, just starting off first with the report that you guys have put out, and particularly on the large cap names that you seem to be more sanguine about, considering now that we're seeing a lot of this momentum coming back into mid caps and small caps. Is the favor still towards large caps, or is it tilting slowly?
So it's very difficult to say whether the favor is large cap or mid caps, but coming back to mid caps, the point is that the mid cap index has corrected nearly 30% and the lower, and it was even more than 30%. So from these levels, somewhere around 16 times forward is what the multiple at the mid-cap space is. Now, with this kind of a multiple and a potential earnings compounding which is superior to the large caps, there is a reasonable hope and a room for improvement of prices in the mid-cap space. So, of course, I mean, market will have to make up its mind towards mid-caps, which it has been fairly not looking at this space for last 6 months or so. But once done from these levels, we don't expect any kind of a derating happening in mid-cap space. And if there is no derating happening in the mid-cap space, we of course cannot lose money because of derating. So once that base is stabilized, we can move on and get really excited about the earnings opportunity, which is visible. So I cannot talk about the stock specifics, but whether the bottom has been formed, in our reckoning, we are near near that bottom space.
That's interesting. Is that why you're seeking alpha right now, Sindhu? I presume you've launched some alpha fund as well. What's the rationale here? Do you reckon that there'll be opportunities to create significant alpha on any kind of smart purchases that people do right now?
So yes, the story of global capital markets for last 10-15 years is that the passive money has grown by leaps and bounds. Not so in India, but globally, yes. And it is now such a big industry that at some level it overshadows the actively managed fund. In fact, the sweetest and to an extent even a bitter irony is that it is the active money which creates a particular level for a stock, and it creates the space for that stock in the indices. And all the passive money does is to clone that and create an ETF or any kind of a passive investment vehicle. Now our job is that, and we have put out a product also which clearly helps the active fund managers to generate alpha. So it's that we are looking at the world from their eyes and try to generate alpha so that alpha fund managers or the active fund managers do a better job. So that's the idea behind our alpha product.
The point being, do you reckon that in large cap space as well, there is significant alpha to be created, or is the risk reward in bottom up stock picking at the broader end of the spectrum, which got beaten down quite strongly, despite in certain cases, the earnings trajectory looking okay?
So it's very difficult to say that to create a bucket that only large cap will create or bottoms up will create. Ultimately, a job of a fund manager is a very solitary job. Whether he stumbles upon his jewels in the large cap space or any bottoms up story is best left to the diktats of his scheme and the letter of offer. But yes, large cap also offers a significant opportunity in India, and in last 15-20 days we have seen that how much moves can take place in the large cap also. Now also the beauty of large caps is that when you risk adjust the return, it really ensures a fantastic quality of sleep at night. So I will not bifurcate the whole market into large cap or bottoms up, but yes, opportunity in India, and if there is a socio-political economic stability, then can be of a different magnitude than what we have seen in the last 6 months.
All right, let's come down to your choices then. Within the large cap space, your overweights and underweights. So the theme seems to be more consumption driven. You've got names like Marico, M&M, United Breweries, Reliance Industries, the big one there, which is near its 52-week high yet again. So just run us through this list and why you like them.
So I'll not talk about a stock specific, but we can talk about the super and supra themes out here. Consumption, as I have been pointing out on this channel also, has been a reality in India for the last 5 years. Even when the present regime came, there was a big hope that non-consumption stocks will do well. They have done well, but they have not created a spectacular wealth what has been created in the consumption space. Now, whether it helps anyone or does not help anyone, the reality is that in India, the maximum alpha has been generated in consumption plays. And in the foreseeable future, with economic growth getting better and more Indians becoming a part of the consumption chain from getting into the consumption theme, I think this sector, despite heavy multiples which operate out there, very rich multiples which operate in this space, will be the theme to play out. Essentially what we are saying is that we are not fearing derating. Now if we are not fearing derating in the consumption space, an earnings opportunity of anything between the consumption space, which today is anything between 12% to 24%, is what creates a reasonable shareholders incremental wealth creation in 1 or 2 years and a fantastic incremental shareholders wealth creation over 3 or 4 years. Now anybody can multiply 72 by the growth rate and he'll see how many years it doubles itself. So this space with not a very high growth rate but with high ROEs creates a great shareholders wealth creation, and ultimately any investor, be it institution or retail, ultimately lives and dies for it.
Okay. Sidhu, the last few days have seen the return, maybe because of the market mood, but they've seen the return of a bunch of stable names which are underperformers over a 3, 5, 7 year period. Since you look at long-term cycles, would you believe that the cycle, earnings and business life cycle for companies in the hotel space or the cement space could be turning?
So, I mean, look at the past 5 years. Earnings growth have been nothing to write home about. In last 4 or 5 years, year after year, Nifty has returned nothing more than 5 or 6%. Now, talking of Nifty and not segregating to the two sectors which you have been saying, I think FY19 will be better, and we are about to close FY19 than 18. We are also believers of the fact that FY20 will be significantly better than FY19. Now, you can always say that there can be various reasons for the same, but of course, earnings momentum incrementally is looking better. So all the sub-segments or sub-sectors which get aggregated into that earnings growth potentially will be showing better momentum. That's our hope and that's our bet. So to answer your questions, yes, these two sectors also in a wider upswing and animal spirits coming back and mood getting better will be showing better results. That's our hope and bet.
Okay, Sindhu Samir, we'll leave it at that. Thanks so much for taking the time out and being with us and giving us that perspective.
Thanks a lot.
That's the view from Sindhu Samir. They've launched some Alpha fund as well, some ideas around that fund, and the top holdings were flashed on your screen just a while back as well, includes the likes of ICICI Bank and a few others. So do watch out for that. All right, let's talk about stocks which are active. Matrimony.com. Let's bring that stock up first on the screen. It's up about 18%, 632 and counting. It's in focus. Amongst other things, what's happened is that Nalanda India Fund has picked up about 9.3% stake in the company in a bulk deal as well, while HDFC Mutual Fund sold that 8.8% stake. But the idea would be that if a company is so much in focus, what's happening with the business? That's what we should try and figure out. And to talk about that, Jay Murugavel, he's the founder and CEO of Matrimony.com, joins us right now on the phone line. Good having you, Mr. Murugavel. Thanks so much for joining in. I hope I'm pronouncing your name correctly.
Yeah, you are saying it right.
I am. Great. Thanks. Okay, talk about how business is looking for a large fund, global fund, to pick up 9.3% would mean they would have seen something both in terms of the current performance as well as in terms of performance going ahead. How is the business environment looking like?
Oh, definitely looking very good. A couple of things have happened. We signed up with Dhoni as a brand ambassador. We launched a campaign a couple of months before. We're definitely seeing a good traction in terms of profile acquisition. On the business side, definitely things are looking very good. This quarter, definitely billing will demonstrate a very good growth. All this will translate into a good revenue from Q1 onwards. In fact, we are looking at a good double-digit growth next year, and things are bouncing back as we speak. So we're really excited about the way things are spanning out, both in matchmaking as well as in wedding services. So very excited about the whole thing, and yeah, things are looking pretty good.
When you talk about double-digit growth, could you just give us a rough estimate as to what those numbers could look like, and would that come on the back of margin expansion? Because most of the analysts are suggesting the fact that there could be some amount of margin pressure for the business going forward.
And add to that the fact that your matchmaking business has tapered off in Q3.
No, because we stepped up marketing, and as I said, we launched the campaign only in the month of December, just a few months ago, and there's a good growth in profile, and the revenue has picked up. Again, the billing is moving up in this quarter, because for us there's a lag of 1 quarter between the billing as well as on the revenue side. So the increase in billing will translate into revenue in the following quarter. So while the margin has dropped in the Q3, as we progress, the margin will bounce back. Next year, definitely we see the margin bouncing back to the mid-20s level on matchmaking. Then we'll move further because we have strong operating leverage. In the short term, because of the increase in marketing spend, while the margins have kind of slowed down, because it's a cautious decision what we have taken to drive the business growth. And again, the matrimony is a very large opportunity. And so it's important that we invest big in the business. And as I said, the growth already started picking up. With this quarter, we see the good billing growth, and the next quarter onwards, we see that the revenue moving up and the margin coming back from next year onwards.
So that's Q1. So Q4, you're saying will still carry forward from Q3 in terms of subdued performance?
Absolutely, because for us, there's a 1 quarter lag between the billing and revenue. The Q4 will by and large reflect the billing happened in the Q3, but the Q4 will be reflective of what's going to happen in the Q4, yeah.
Just throw some light on what the marketing spends have gone up by.
Marketing spend will definitely move around compared to last year. This will moving around 40%, and we are at this point of time matchmaking spending around 23-24 crore per quarter. So we expect a sort of the similar line as we progress, and it depends on the opportunities, depends on how others doing in the market. So, but again, we significantly increase the marketing spend. Because of that, the margins have come down. But again, as I said, because of operating leverage, we expect the margin bouncing back from Q1 onwards.
Aside from that, let's talk about the projection in terms of the demographics and the change of that. Where is the most amount of traction coming in from?
The traction, because of today the marketing campaign is across India, we've seen a good traction everywhere. Even we've seen a good traction in North and West. But definitely South and East are a very strong market for us. We're definitely able to capitalize on our strong position in those markets. But since it's a pan-India campaign, we're expecting we're seeing a good growth across the region. So definitely see a good growth coming in the North and West as well, because those markets it's very large markets, and we see a good opportunity in those markets.
So on one side, you're saying that your marketing spends have gone up. The growth potential will kick in only in the first quarter of next year. How are you filling this gap in the middle then?
Basically, that the revenue growth happening from the Q1 onwards, because for us, since I said that there's a lag of 1 quarter, the increase in billing in Q4, which is already happening, which is reflected only in the Q1. So again, this quarter, since the marketing spend has moved off from last quarter onwards, with the increased revenue will help us to drive the margins from Q1 onwards.
Okay. So maybe you briefly touched upon it, but I just want to give you an assessment. I think brokerages and saw a couple of notes all talking about you maybe nudging close to 400 crores or 390 crores in FY20 in terms of revenues, and a profit number which would be closer to 45 crores, 45 to 47 crores. Based on the growth numbers that you told us, you think these are reasonable estimates?
Oh, definitely. We believe that we can do better also. Again, I know we think that things are going very well, so we probably can do better also. Again, at this point of time, that's what we see. And so let's wait for the Q4 to come, then that will be able to demonstrate what's happening. And that will set the tone for what's going to happen in next year. But yeah, the projection seems to be we should be able to do better. Yeah.
Okay. And I think my colleague asked you, but you think that you will be able to show in this higher revenue growth at better EBITDA margins?
Yeah, definitely. From Q1 onwards, the EBITDA margin move up because of the increased revenue. Yeah.
Okay. Lastly, I don't think your business requires that, but any kind of fundraising activity that you would need, equity fundraising that you would have to do in the next 6 months or the next 1 year?
No, not required, because we're sitting with the 200 plus crores of cash on a quarterly basis. We're adding cash into the system. So again, the capex raise, we have only limited capex, so there's no need of fundraise for the organization. So
would you be a story which uses this cash for inorganic moves, or would you essentially be rewarding shareholders rather more consistently?
We have started giving dividends, and we look for opportunity. If there is any opportunity to acquire any companies, we evaluate, and otherwise, we've been giving dividends, and so we continue to reward shareholders, and depends on the opportunities and what's best for the organization.
My final question, Mr. Murugavel, and that would be on the acquisition bit. Would you be looking to do any inorganic moves in the next 6 months?
Nothing planned and all the things, but if there is any opportunity to achieve progress as a company, definitely we'll evaluate and do what is right for the organization. And so, yeah.
Okay, we'll leave it at that, Mr. Murugavel. Thanks so much for taking the time out and being with us. That's matrimony.com. But, well, I think at 28387, we're looking at live highs for the Nifty Bank, 419 odd points, 1.5%. So really strong move that is coming. Maybe we should try and advance our technical experts and try and see if we can get them early, because this is a rocking show by the banking stocks. Just pull up the MRR function on the Nifty Bank on the Bloomberg terminal, and you will see what's moving up. I think led by a clutch of private sector banks, and naturally that would have to be the case for the Nifty Bank to do what it is doing. But this is a remarkable move that we're seeing on the banks today. It started off well, but in a day's move for the stocks to do this. And IndusInd Bank 4.5%, ICICI Bank is up another 3%, Kotak Bank, HDFC Bank has moved just about 1%, but it's a heavyweight, and therefore that moves, yes, and therefore that has that impact. But everything else, which is heavyweight, Devina, seems to have done well. It's only the lighter names which are not doing well. Everything which has got some weightage in the Nifty Bank.
So the top three are about 10 to 14%.
Right.
Weightage. Mahindra is about 13. Kotak Mahindra Bank is about 13%. ICICI Bank around close to 14 odd percent, and IndusInd Bank close to 10 odd percent. Axis Bank too within that mix about 10 odd percent. So 10% plus in terms of weightages, but nonetheless the bigger moves are coming in from not HDFC Bank, but an IndusInd Bank, which is up 4.2 odd percent, but a really stellar performance. But it's interesting to see the Bank Nifty, which has moved up about 1.5%. You actually have 4 stocks which are in the red.
Yeah, but which are just tiny tunes, essentially, wouldn't matter too much. I don't know if we'll get the fundamental guests and talk about this, but for the last 2 quarters, a bunch of people have been talking about, one, how because of the reduced NPAs, the corporate-facing banks will start moving into the green and showing profits. We saw glimpses of that in Q3. And then if the credit costs are to come off, remember, resolution through NPAs would also mean that stuff that was written off will come back into the books for some of these banks. Now, if all of that were to happen, yes, the P&L numbers of almost all the corporate-facing banks will start showing that, and maybe that's why the ICICI banks and the Axis banks of the world are doing so well. 386 for ICICI Bank, this is close to its highs. Axis Bank is certainly trading in or around its record high levels as well. So this is a remarkable move that we're seeing in a bunch of these private sector banks, not just corporate facing banks, by the way, even retail facing banks are doing well. And frankly, but if the market is to move up, the highest weightage index has to do well. Just that the highest weightage index is leading the market higher. In the absence of the second highest weightage, which is the Nifty IT, which is kind of staying quiet, you need the Nifty Bank to do the heavy lifting, and that is what's happening. Nifty IT is not participating. It's not going against, but not participating. You need to have the Nifty Bank do so well for the Nifty to do well too. So 11,291 for the Nifty 50, about 1.1%, but it's essentially led by the Nifty Bank, and really smart moves out there, 420 points.
Which wouldn't be surprising though, Neeraj, considering what the currency has also been doing, which has been on a strengthening path since the last 2 or 3 sessions, where we have seen the rupee now at 69.58. So once again at those pre-August levels from where the actual drop in the currency had started off, which caused IT from then to start moving up. So a reversal in the currency, a reversal in IT, seeing some amount of profit taking, and being a more defensive pocket at a time where the rest of the market is roaring and high beta as a pocket seems to be the favor of the season. You wouldn't rather see much money moving into some of these defensives in any case. A lot of money going back into mid caps, small caps, infrastructure names, NBFCs, real estate, all of these stocks which were once negated, some of them have really shone over the last few weeks of trade. Talking about the Bank Nifty now, this is relatively uncharted territory for the Bank Nifty. The last time we hit these levels, we went right back down to about 24,250, or those were the lows that we hit. And from there started to once again slowly but steadily have this grind up towards these life highs once again. Again on the RSI, we are back again into those overbought territories of 72. We've crossed the upper band of the RSI into the overbought region. But let's bring in Sachidanand, the taker of Trade Bulls. He's joining in right now to talk us through whether or not this actually calls for some profit taking at these levels. Sachidanand, lifetime highs for Bank Nifty, uncharted territory. What kind of trades can one initiate?
Good afternoon. Yes, in fact, markets have shown a good resilience, and the way especially Bank Nifty has performed. If you look at some of the indicators, as you rightly mentioned, that the RSI is quoting now in an overbought zone. But if you look at an indicator known as ADX, that particular indicator has just initiated a buy signal yesterday. So probably it will be very interesting to see how this particular momentum, aggravates from here on. But if you look at the price pattern and some of the intraday, formations, trajectory is still open right up to 28,600, and probably, from a momentum basis, I think this particular move may extend further towards 28,600 very quickly. So with that intention, we still continue with our positive bias on the indices, and what we are recommending here is that since it is a overheated scenario, the best way to participate it is through options, and 28,400 call options still can be bought. A stop loss should be placed somewhere close to 62. The time I was evaluating this particular option, it was quoting somewhere close to 100, which has jumped up to 120 now. So still, I think the probable stop loss level stays intact at around 62, and on the higher side, we may see an extended move towards 166, 186 very quickly.
It took just 7 days actually, for us to make this new life high from levels of about 26,400. And on a daily basis, we've seen a positive close for the Bank Nifty. Is that a sign that there could be some amount of exhaustion of bulls creeping in at these levels, Sachidanand, or you believe that that will not be the case and there's just more strength prevailing from here on?
Well, I think the rotation within the banking stocks is also good. In fact, we have really not seen any signs of exhaustion within the constituents. Even in today's session, we have seen that the baton has been passed on to the likes of IndusInd Bank, and the way they are performing, I think there is still a headroom which is still left. So from an exhaustion point of view, I think it is, very clearly stating that there are no signs of exhaustion yet. But if you look at the indices, I think the first sign of exhaustion would be a close below its previous day's swing high or a swing low. And I think the way the setup is, shaping up, I don't see that particular thing happening today or maybe even tomorrow. So with that intention, I think the momentum should continue, and we may see 28,600 levels very soon.
In fact, today we opened with a gap up. So, as Sachidanand was suggesting, the previous day's swing high was about 28,035. We are closer to 400 points above that. So, unless and until something drastic happens, you probably may not see those levels coming about anytime soon. Amar Singh of Angel Broking is also joining us on the show right now. Amar, quick call on the indices today. Follow through coming in from yesterday's strong move.
Yeah, I would say the way the indices have rallied clearly shows that bulls have the upper hand, and also the way Nifty and both Bank Nifty have gapped up today. And looking at the short-term trends, the uptrend remains extremely positive and strong. And looking at Nifty, I would say somewhere around 11,350, 370. That's the next level of resistance for Nifty. Whereas on the downside, 11,170, 11,180 earlier, that was the crucial zone of resistance. So that becomes a support zone, but any dip can be used as a buying opportunity, because the way both Nifty and Bank Nifty had rallied, also we are seeing a broad-based rally. So that's one positive aspect of this market. Leave apart primarily the IT stocks. So that bodes well for the market.
All right. Let's get in some stock ideas before we bring in Avinash Gorakshekar. Amar, I'll keep it with you.
Yeah, the first stock to look at is Mahindra and Mahindra. If you look at this particular stock, what we are seeing is that it did correct significantly, and from almost 620 levels, it has bounced back. And I would say that there is a possibility that the stock could trade higher. So Mahindra and Mahindra is one stock one can look at buying. 685, 688 is the range one can look at buying, with a stop loss of 664 and a target of 730 in the short term. And the second stock to look at is from the banking space, and that is Axis Bank. This is one stock, if you look at across various time frames, this continues to be strong. It has taken out its crucial resistance zones, broken out of consolidation zones, and continues to be strong even on the short term as well as the long term charts. So this is one stock one can look at buying. So any pullback towards 738, 740 levels can be used as a buying opportunity, with a stop loss of 723 and a target of 769 on the upside.
Sachidanand, your stocks?
Well, I have two recommendations, and both on the long side, and if there's a very common thing which is witnessed in most of the price patterns here. So both the recommendations are from a candlestick formation called as Rising 3. So this particular pattern is evident in a stock like Tata Steel. Still, if you look at the daily formation, the stock has a headroom right up to 538, where its 200-day exponential moving average is placed. And the formation indicates that the momentum will only fizzle out in case if the stock drops below 523. So still longs can be built up in Tata Steel for an immediate target towards the 200-day exponential moving average of 538. And the second one is a buy on IndusInd Bank. In fact, a very similar formation here. The 200-day exponential moving average is placed somewhere close to 1630. A lot of headroom is still available. 1555 should be the stop loss for the trade, and both have a similar chart structure and formations. Both are reversing from the larger degree, down move. So I think both are ideal candidates in a scenario like this, wherein the reward to risk is still suitable.
Okay. Well, doing rather well for themselves. Just one quick thought before we get in the fundamental conversation going. And Amar, that's on Bharti Airtel, 5% higher, 8% yesterday. It's not just Bharti, Vodafone Idea too has done really well in the last few days. Would you be a buyer in either of these?
Yeah, looking at way Bharti Airtel has rallied, I would say that last 2 days have been spectacular from almost 308 levels, currently around 350. But I would say that from a long-term perspective, this is a crucial zone of resistance. So 350, 355 is a crucial zone of resistance, because if it manages to sustain above 355 levels, then the stock is headed higher and towards 370, 380 levels. So I would rather look at booking profits around these levels, and only a consistent breach and close above 354, 55 levels would indicate that the stock will trade higher.
Okay. Bringing Avinash Gorakshekar, Joindre Capital, is joining us on the show right now. Avinash, what have you made out of this tremendous interest that has suddenly come upon the Nifty Bank and the stocks thereof? So Axis Bank, ICICI Bank, both at life highs. There's been HDFC Bank, which has constantly been moving up as well.
My guess is, I think, Divina, this move has actually been triggered largely by the kind of flows we have seen from the FIs. I think in the last 2 weeks, FIs have actually pumped in a lot of money, and I think this was the exact pattern during the last 2014 election. So I think probably FIs have been more confident in preempting what is the kind of net election result. So that is point number one. And point number two is, I think the markets are now clearly looking at a NDA victory with a election number of roughly election number of around 250 to 260 seats. And typically one technical factor which is also going to pull the market in April is most of the March end results are going to come after the month of possibly in the middle of May, because these are going to be audited numbers. So I think till that time, probably this kind of rally which you are seeing in mid caps, in some of the frontline counters, is going to continue. So I wouldn't be surprised.
Good numbers will come out in the month of April.
I would say that even if the numbers are bad, Neeraj, the bad news won't come out in the month of April.
That's so only the good numbers. Good numbers will come out in the month of April.
Yeah, I mean, technically there is a rule where you got to come out with audited numbers. And so month of April is going to be a month where you could possibly still rejoice with these kind of moves, So clearly, of course, the expectation is not very great from sectors like airlines or typically, import sensitive companies. But the point which I'm trying to drive is that April is going to be a month where possibly companies which are going to present bad set of numbers may elongate the period and come in the month of May.
Okay. By the way, just look at this. This is the point I think that Avinash was making, similar to 2014. This is the pre-election rally in 2014, and how the markets gained from the time the Election Commission announced the dates till the time the verdict came out, which was on May 16th. The markets gained about 9%. This was even more pronounced, by the way, in 2009, but we're not going that far. Then it was a depressed market which went up. But in 2014, it wasn't technically a depressed market, but gained quite a bit. But Devina, look at this. Once it's taken out that level, the Nifty Bank is rip and roaring. 478 points now, 1.71%. And frankly, I don't think it is differentiating between corporate-facing banks or retail-focused banks. Yeah. Both are doing well. Yeah. The heavyweights are really flexing their muscles.
In fact, Neeraj, if you remember some time ago, at the time of the state elections, we'd also highlighted how from every May to the next May elections, the index has doubled itself. And the Nifty from last time around was 6,800 odd. So whether or not it doubles is something that we need to wait and watch. But keeping with the momentum now, and the pre-election rally seems to be going really strong. And, also just to focus on some of these stocks, Gujarat-based stocks that we were noticing, the trend that's been taking place in the last 5 to 6 trading sessions, where almost 5 to 20% of gains have come in most of the Gujarat-based names. Not to draw any comparisons, but it's just that you've seen these stocks moving really strongly. So Gujarat Gas, Gujarat Ambuja, you pick it out in the last 7 days' performance, and you'll see how these stocks have done. Avinash, just to get a sense from you as to what are you going to be focusing on now?
No, I think clearly within the frontline counters, we are positive on the automobile companies like Maruti, Mahindra and Mahindra. We believe that, once the sluggishness in the auto sales actually ends, and possibly for say a couple of months, once the volume numbers start kicking in positively, you're going to see a lot of incremental appetite for these companies, not only from the funds but even from the FIs. On the mid-cap side, we are positive on companies, like typically Orient Electric, which is like a small consumption theme and is now the demerged entity out of Orient Paper. I think this is also another interesting mid-cap which possibly could definitely give a decent risk reward. And I think within the auto component space, we still continue to like stocks like Subaros or typically Lumax Auto Technologies. Very good balance sheets, very less debt on the on the company. And I think clearly there are some trigger points in case of Subaros. The collaborator Denso is going to take a stake at 400 odd rupees. So I think clearly if one has the time horizon, then definitely these are stocks which one should accumulate at the current levels.
Well, it is interesting. The other set of stocks, Avinash, are the telcos. And Bharti Airtel has had just a remarkable move the last 2 or 3 sessions. Not that the other one, which is Vodafone Idea, hasn't, but just that Airtel has had quite a spectacular move. And I'm just thinking out loud. There's nothing else. 12% or 13% the last few days. What's fueling the rally? Is it short covering? Is it the fact that it was depressed and therefore seeing some buying, or is it FI interest?
No, I think it seems largely short covering, and I think some news flow regarding the Bharti, Infratel kind of disinvestment, which I think came about yesterday or today. I think on a fundamental basis, Neeraj, I wouldn't be surprised that pricing pressure is going to continue, and I wouldn't be surprised that the March quarter could be equally bad like the December quarter. ARPUs are going to remain under pressure because my sense is that once Reliance Jio starts the fiber to home network, that is going to increasingly put pressure on the ARPUs. Clearly that is another set of business which is going to actually give incremental revenues to Jio. So I would be still a little skeptical in buying Bharti after this rise. Clearly it is better to wait for a 1 or 2 quarters before one takes a call, but overall the near-term headwinds definitely look challenging for the telecom sector.
All right. For now, though, they seem to be in a sweet spot. Bharti Airtel is up in 2 days, almost 11%. And being an index stock, that's quite an achievement. Oil marketing companies, Avinash, they too, and obviously being a part of the PSU basket itself, because the entire pocket itself has been moving, be it the PSU banks, be it oil marketing stocks, you pick up a name and you'll see that stock moving. Is it the depressed valuations that are causing the flurry of activity here too?
No, I think in case of oil marketing companies, I think the rupee movement in the last few days has given some comfort to these companies. And I think if crude remains at the current odd levels and we see a further appreciation in the rupee, then you could possibly see stocks like HPCL, BPCL, IOC definitely moving up. I would bet clearly these companies would definitely benefit from a better GRM, and obviously their sourcing costs could come down. As far as the PSU banks are concerned, I think most of the banks are looking forward for resolution of old cases, and I think hopefully if that happens quickly, post the elections and post the new government taking over, I would believe that that is one trigger which is yet to play out. And hopefully, if that is played out, you could see banks like PNB, SBI, a lot of money which has got stuck up in bad accounts would possibly, come back to these banks. So that is possibly the near-term trigger, which possibly we are seeing, this kind of activity here.
Really doing well though. Banks are just, I just can't stop gushing over the kind of moves that have happened here.
It's almost 500 points.
Yeah, it's just really setting the stage. And that, by the way, that's pulled the Sensex at the highest point of the day as well. 500 odd points, the Nifty 140 odd points. This is 2 days on a trot now that we've had such a strong move on the benchmark indices. 11,300 on the Nifty and going very strong. Just wondering, would you use options in any way, Sachidanand Uttekar, in the current market scenario? I know you briefly touched upon it. Would you, for example, because the premiums would be strong, go out and sell some of the out-of-the-money call options on the Nifty or the Nifty Bank, or is it too risky a move?
Well, doing that would be risky because clearly we are in a very strong market, and even from a momentum perspective, we are really not seeing any exhaustions. So probably, this will be too early to, preempt whether a particular move which is initiated on the lower side would exhaust here. So I think technically, one should avoid doing that. But I think most of the traders are doing, deploying 11,500 as a cap on this indices right now. But I would strictly avoid it and probably wait for some exhaustion signs and then, start writing some of the call options.
496 and counting, and as we said, that's really revving up the mood within the Nifty as well. And frankly, if you just look at the Nifty 200 as well, don't really go too much lower down the pecking order. A clutch of names have done well. Adani Enterprises is now knocking on the doors of 150. Ajanta Pharma, a company that we just spoke about a couple of days back, is about 5.5%. And real estate names, hotel names, textile names, almost everything is doing remarkably well for itself. After a while, we're seeing DLF takes the lead move of Avinash Gorakhshekar within the real estate movers. Yes, some of the others have moved, but DLF is out there making its presence felt both on the price and the volume front. Would you, because of the high beta nature of the market currently, look at the larger names like DLF at all in the real estate space?
I think in case of DLF, if one were to take a near-term view, I think one positive fact is that, the management is very conscious that they want to reduce the debt on the balance sheet. In fact, they have now announced plans of coming out with a QIP of around 3,000 crores, which could possibly use for further debt repayment. So I would believe that, the operational metrics is yet to get better, but clearly after RERA and after GST, relaxations, I think the sector is definitely now headed for good times. Clearly, players which have got a fair amount of geographical access to good parcels of land and where the visibility of business is good, I think definitely should do well. I think apart from the front lines, Neeraj, stocks like Godrej Properties or Soba Developers, these are also companies which my sense are going to show better numbers, as visibility on the execution comes in.
Okay, that's for the real estate pocket, which is also one of the most smaller sectors. The entire sector obviously is a mid-cap space. There's no real estate company which makes it to the large-cap space, but that's been fairly active in the recent past. The other pocket, and Avinash already highlighted within the auto pack, Maruti is something that he likes. The stock has given various opportunities, trading opportunities rather. It's moved to levels of about 6,800, 6,900, and then come back to about 7,300 odd levels from where it's corrected once again. Now, the second time that the reversal is taking place and coming back to about 7,200. Sachidanand, is there a trade here on the downside for Maruti? Can we trade that range yet again?
Well, I think the range is very well defined. I think the stock has already established a double bottom kind of a formation at around 6,600. And the way it has been consolidating, probably, it is getting ready to, revisit its upper bound, which is placed somewhere close to 7,500. So probably your stop loss on a closing basis should be deployed at around 7,030, and longs should still be considered in Maruti. I don't see a bearish sign in this particular stock, considering that the double bottom formation is already placed near the 6,600 mark. And one more, theme that I would like to highlight is, since we are talking about more of auto, tire stocks are doing well, and I think, this is a very good time wherein a stock like JK Tire, looks very promising for fresh momentum. A stop loss should be placed somewhere close to 91, and I think the headroom for the stock is resting around 103 to 105. So, since we were talking more about auto ancillary, this is one particular, one particular sector where we are also bullish on.
Fresh risk on mode. I mean, you don't otherwise see NBFCs make such sparkling moves. Edelweiss is at 180. Muthoot Finance is at life highs. And non-NBFCs too. I look at stocks like Adani Gas, Havells India. There's a clutch of names out there. Astral Poly at 1243 is packing a punch. Bata India at 1366 is up and up quite remarkably in the last few days. So this is serious momentum coming in, carrying the rising tide is lifting all boats along with it. But it's just from a bull's perspective, this is turning out to be a really good period, the last few sessions. Avinash?
Contrary to actually what the rest of the global markets have done, they've actually turned around. So the last 7 days particularly were not all that great from a global market standpoint.
Yeah, US hasn't done well, yes.
Which sort of reversed in the last 1 or 2 days.
Yes.
and we have been continuously riding the wave all through that period where the global markets were in a little bit of a slump. So,
yeah, well, some idiosyncratic factors, and then of course supported by the rally, I presume the last couple of days that the globe is having too. Save for the FTSE, others have done okay. The MSCI iShares EM index too was up about 2% in trade yesterday, and Asia has done well, reasonably okay in trade today. But Devina's point is well taken. I think these have made moves in the last couple of days. I think India has just had a fabulous move the last few days. But
takes you back to August when the rest of the emerging market pack was down and out, and there was a clear divergence where India started to make its move on the upside. But 2019 started on the complete reverse note, where India started to give way and the rest of the market pack started picking up, and China actually went into the bull market.
It's a bit of a catch-up, maybe for our markets too. But it's just this move in some of those specific names. Avinash, Bata India, Astral, Poly, Havells, some of these consumption-related names, and all of them trading at life highs. Any thoughts?
I think clearly, Neeraj, these are all frontline counters, and I think the market has obviously given a thumbs up for these well-established players. I think within the overall choice, I would believe that Bata and Havells still would continue to rally, considering that both these companies presented a very decent set of Q3 numbers, and I think the outlook for FY20 also looks a lot better. So I would believe that yes, I think with the political uncertainty out of the way, the markets are definitely now coming in full vigor and possibly pushing in all the favored frontline kind of counters, and I think this rally will continue for some time.
Okay, just stay with us, gentlemen. Lots more to talk about, but Indian equities are back in favor with foreign investors last month, and it's also the sector that's caught many by surprise. Banking counters attracted the highest amount of flows from foreign investors. Yash Upadhyay is here with more details in our chart of the day segment. Yash.
That's right, Devina. We'll first start with the foreign flows, and in the month of February, they hit a high of $2.5 billion, almost $2.4 billion in the month of February, which is the highest mark in the last 15 months when it comes to foreign flows. But like you mentioned, the top sectors which saw the highest foreign inflows, that has to be the banking sector, because the banking sector itself saw almost 34% of the total flows, nearly 60% of the total flows coming in. So about $1.3 billion of positive flows coming in from the foreign investors, which is for the first time in nearly 8 months is when the foreign investors have turned net buyers in terms of the banking stocks. Also, interesting to note, the fact is that that number of about $1.3 billion, that is the highest in almost 2 years. So the highest number correlating to that was in the February of 2017, when the numbers stood more than that. So clearly banking stocks are in focus when it comes to the foreign flows.
Right. Yes, thanks a lot for that. That is the activity, the foreign institutional activity, particularly within the banking space. But a few more stocks then to just highlight them before we go on and get some more chart checks from our experts. I'm going to start off first with what's making its move, aside from the ones that we've been seeing. That's Bharti Airtel, which is still the top performer on the index, and the rest of the banks. But Z is not doing all that badly either. The stock's up about 4% at 470 now. The last 1 month has moved up 13%, and Tata Motors in the last 1 month has moved up 22%. Titan is a gradual mover, and today's session sees some profit taking in Eicher Motors, which is down 1.5%. Yesterday, in the last few trading sessions have been particularly good. In the last 7 days, Eicher Motors has gained 14%. Would you sell Eicher Motors? Would you go short on this one, Amar Singh?
Yeah, looking at Eicher Motors, I would say that one can look at booking profits around these levels, around 23,000 levels, because on the long-term charts it is very close to its key resistance zone of 23,200, 300. So there it has bounced, it has corrected from those levels. So I would say that, yeah, one should look at booking profits, but I would not say go short, because the momentum, the short-term momentum remains extremely strong. So there's a possibility that the stock could find support around 22,000, 350, 400 levels and bounce back from those levels.
Well, Sparkling moves, and that's the only way we can describe this rally that we're seeing in almost all the markets. We could well end about, maybe 50 odd points lower from where we are right now, but that doesn't take away the fact that it's been a pretty good, strong move. By the way, as we speak, some names are now correcting more. So Eicher Motors is now at the lowest point of the day. Bajaj Finance is at the lowest point of the day. And while PSUs by and large have done okay, today is a day of a pause or some profit booking out here. ONGC, Coal India, NTPC, HPCL, State Bank of India too. All of these stocks are in the red. So it's not all hunky-dory, just that the banks are an overwhelming weightage, and therefore they seem to be doing rather well for themselves. This is the list that I'm talking about. All of these stocks are substantially off their day's highs. Before we take that break, Amar, a word on Eicher Motors or Bajaj Finance on a very strong day for the market since these stocks have come off. I'm wondering if you would take a trade on either of these two, and if you've already spoken about these, then a word on ONGC, which is also corrected.
Yeah, I would say looking at Bajaj Finance is one stock one can definitely look at, because it has rallied. Today it has corrected significantly, but this could be an opportunity of a buying. Because if you look day before yesterday, on 8th March, it had made a low of 22,716, and from there it has bounced back. So there is a possibility that the stock is in a strong uptrend, so there could be a further pullback from those levels. So ideally somewhere around 27.50 or so one can look at buying with a stop loss below 27.10 and a target of 28.20 on the upside.
Ash, one final word for somebody who bought a Sterlite Tech on your recommendation. Can he add more? Should he book profits, or should he just stay put? That stock is at 280 now.
No, I think he should definitely stay put, and if required, any correction presents a good opportunity. So I wouldn't suggest, to book out as of now. I think we are going to see a very strong set of numbers for FY20 also. And I think as the 5G deadline approaches nearer, Neeraj, I think you're going to see further re-rating on the stock.
Interesting. Must say, for everybody who says that it's expensive, it's at about 15-16 times FY20 earnings. So it's not a dramatically expensive stock. So that's something that you ought to keep in mind as well. Growth compensates for lofty valuations. Avinash, thanks so much for joining me today. I really appreciate your time. That's the view from Avinash Gorakhshekar on a bunch of spaces, including banks, including some ideas and some real estate names as well, all of which are firmly in focus today. But yes, nothing takes away the focus from banks. Maybe Bharti Airtel does. It's up 5.5% now, 352 and counting. It's a beaten down stock that's moving back. But yeah, the banks, and ICICI Bank and Axis Bank in particular, trading at life highs. It's just remarkable the way these stocks have moved. In a bit, we'll get in Dhananjay Sinha of Emkay, who, of course, head of research there, but tracks, amongst other things, banking and economy very, very closely. It'll be important to get his views on what happens next within this pocket as well. Watch out, as I said, everything from corporate-facing banks to retail-focused banks are doing well. Dhananjay, good having you. Thanks much for taking the time out. What's fueling this rally, and have you guys seen at your dealing desks as well, FIs putting in money into banks? Because that seems to be one obvious reason why almost everything which is a heavyweight in banks is doing very well.
Right. So I think the thing is that over the last a month or so, I think there has been good flows on the FI side, and it had been on the negative side last year. So I think with a certain positive view on global liquidity, there has been a sort of catch-up, especially for emerging markets. And earlier, we have seen that in Latin America and China as well. So I think if you look at India, I think it's a it's late in terms of joining the party. I think that's what is happening, and there were certain local triggers. So I think the FI flows have seen trickling into our markets, and I'm seeing that momentum across sectors. And I think with banking sector being heavyweight in the Nifty, I think there has been a considerable amount of interest over there. And with the markets crossing, I mean, if you look at the Nifty, it has crossed 11,000 by significant margin. I think it's about 11,400. So I think the bank has to lift up that, has to be part of that sentiment that is there. So I think that's how I would look at it. I think it's fairly a liquidity-driven rally that we are seeing across the board.
True.
And India, and banking sector also.
So
and
is it?
So I was just wondering,
is it that people, I mean, is it banks driving the rally, or do you think banks are a resultant factor of the larger interest in the markets? Because today's rally certainly seems to be all about banks. 500 points now up for the Nifty Bank.
So up until now, what we have seen is that there has been a sort of a lot of rally in the mid cap and small cap space. So that was the situation over the last I would say 2 weeks, and I think now that is actually permeating into the larger names as well. So I think with FI flows turning positive, that's how it is panning out. So I would say it's a part of the broader momentum that we are seeing. And I think banking sector specific, I don't see any particular trigger that may have generated this kind of rally. Apart from that, except that you have SBI which announced a reduction in the, or at least linking of the saving bank rate to the repo rate. That is one news that we've seen over the last couple of days. So if there is a spillover effect from there, one doesn't know. But that is the only news that I can see. But that's not necessarily a very positive news, as positive news as to justify the rally that we have seen.
Dhananjay, has the bus been missed now on some of these names which are already trading at their life highs? ICICI Bank for one, these stocks have had opportunities in the past where you've got them at prices of 320, 330. Correct. And it looks like there's no stopping these counters right now. So is it a bus missed?
No, I would say we have been structurally more overweight on the bank, on the private banks, and if you look at our portfolio, the India portfolio, there is a overweight on the banking sector, and that essentially comes from significant overweight on private banks, including HDFC Bank, ICICI Bank in particular, Axis Bank is another one that we've been talking about. So I think it's part of a long-term bet that we have taken. So I think we have not really missed it. So we are very much invested in those in those names and on commercial on commercial lenders or corporate lenders. So I think especially in the banking private sector we have been overweight. So I think that's playing out well for us, and we have been overweight on the banking piece at least. I guess we have been underweight on NBFCs, possibly. Some part of the rally over there we have missed, but I think at a broader level, overall BFSI we have been overweight. So I think that compensates.
Do you have any particular pecking order within the banking space?
So, our pecking order has been ICICI Bank and Axis Bank, and we also like HDFC Bank.
All right, got that. Dhananjay, thanks so very much.
Thank you.
Okay, go ahead, complete your point.
No, that's it. Thank you.
All right. Thanks a lot for joining us, Dhananjay, for your quick comments there. And 500 points plus now on the Bank Nifty. It's just been a clear glide up right from the word go. The banks have been up and about. It's a tear for the Bank Nifty. New life high in today's session, uplifting the Nifty itself, because you've got all of these banks, HDFC Bank, ICICI Bank, IndusInd Bank, Yes Bank, they're all components of the Nifty 50 as well, which is why you are seeing a trickle effect of the same on the Nifty 50 as well, which is up about 145 odd points. 28,460. Sachit Anand had recommended going long the 28,400 call option. That's become in the money now. Sachit Anand, quickly, does one square off that trade?
No, I think the way HDFC Bank has broken out from its 14 weeks of consolidation, this particular bank itself has the potential to take these levels, elevate these levels. So I think one should continue holding on to the longs. I think the best review should be done when the spot reaches 28,600 kind of a zone. I think till then, I think the momentum should continue.
All right, got that. Gentlemen, just stay on with us. Lots more to talk about, and this is turning out to be a really exciting day of trade. The last half an hour is going to be equally crucial. We're going to take a short break right here and come back on the other side. We'll get you the Fab 4 stocks of the day. We'll get you some dealing room checks as well as some closing strategies. Stay tuned.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Back with countdown right here on Bloomberg Quint. 23 minutes left for the markets. I'm sure the bulls don't want this to end because this is looking remarkable. 518 points for the Sensex as well. And mind you, for the benefit of our viewers, I just want to bring up what Europe is doing once again. It's not that the rest of the world is having such a remarkable up move. But having said that, there is gains in our markets. So a bit of a catch-up that we're playing to what the rest of the world is doing. Bring up the volumes. Currently, also bring up what the... So by the way, the cash and the F&O volumes, both of them looking very, very robust. And this is not Thursday, by the way. This is not the Bank Nifty or the Nifty weekly options expiry. And yet, the F&O volumes look like they will nudge the 10 lakh crore mark. And the cash volumes are northwards of 36,000 crores, which means a realistic chance of actually nudging in 40,000 crores as well. I'll be really interested in seeing what the FI number looks like today. Every single day, the last 8 days or the last 9 trading sessions in the month of March, we've had FIs putting in money. The average number must be northwards of 1,000 crores. Even if you account for bulk deals that would have happened, the average number would be northwards of 1,000 crores every single day. I think 9,000 odd crores that 8,500 crores the FIs have put in thus far, which is quite remarkable. This is what's happened the last 5 days. March 5th, 870 crores, and then about 1,000 crores. Yesterday's session, 3,800 crores. So the going is very, very strong. Let's see if all of this continues. Today will be a really important number too. Let's get in Yash Upadhyay to try and figure out what's made it to his Fab 4 list of the day. And Yash must be a really difficult thing to do because there are a lot of names. You have to compress that list.
Absolutely.
Or just extend it, make it Fab 10.
That's right. Another idea.
Absolutely. We could have had more than 4 today. But I'll start with Welspun Corp though. That one's up about 4.5%. It's raining orders for the company. It received a big order for the supply of about 121,000 metric tons of pipes, bringing this overall order book to more than 14,500 crores for FY19. So it's up in trade today. GMDC is up 6.5% as well after brokerage firm Edelweiss came out with the report initiating coverage on it. They have assigned a buy rating and have set a target price of 105 rupees, which indicates a potential upside of more than 22% from its previous day's close. It has run up about 6.5%, but KEC International is another name you should be watching out for as well. It's up 6% in today's day of trade on the back of big orders to the tune of almost 1,300 crores that the company has received. Obviously, a bulk of them, about 644 crore rupees coming in for the railway and the smart infra business of the company. And lastly, don't really know what's going on when it comes to the textile names. Most of them are trading higher. Indocount Industries being one of them. It's up 9.5% in today's day of trade, and that is it gaining for a 6th consecutive day. Its longest winning streak since August 2017. Most other textile names as well, like Arvind, Trident, in focus today, gaining substantially higher as well. Back to you.
Okay. Thanks a lot for that. So strong moves in a bunch of these names. Gurmeet Chadda of Complete Circle Consultants with us on the show to talk about his thoughts as well. Gurmeet, good having you. Thanks much for joining in. If your client were to call you and ask you which is the banking stock to buy right now, and let's say I want to buy only 2, I don't want a bouquet of 6 names which I have to put money in. How difficult is that task? What would you tell the client?
So this is not really difficult. I think instead of 2, probably we'll do 3. And I think if you see the up move in the bank nifty, I think finally we saw even HDFC Bank today, participating a little bit after the time correction it has had. So I think it's clearly, we can choose between ICICI and Axis. I think, so any one of them, I think that looks good. We have discussed a number of reasons for that, which includes credit cost being lower, potential recoveries through NPL, the de-stressing on the asset cycle continues. And I think even on the market share gains in terms of deposits, in terms of CASA, it's quite significant. So I think that's clearly would be the top picks. One can also look now at SBI after the change it has announced in terms of linking rates both on the deposit and short-term loans to repo. I think that's a very, very significant move. Initially, what it does is it brings down your deposit cost more and doesn't bring down the rates really on a floating rate basis. And I think its significance, what it will do is it will make the NIMs more stable. It will, have a very, very positive impact on the overall liability side of the book. So if you were to ask me, it would be maybe, if it's 2, it's ICICI and SBI.
Okay, interesting. Gurmeet, a clutch of names have done remarkably well the last few days. We've seen companies moving up in groups as well. So some promoter pledges released in the Adani group, and that entire space has really gone buzz. The last 2 days, the CESC group stocks have done remarkably well too. If we were to look at some of these businesses, is there anything that works well? I mean, Adani Gas is at life highs. CESC Ventures, the holding company largely, but also which does the FMCG business, has gained about 8-10% in the last 2 trading sessions alone. Do you track any of these businesses?
So we do, Dheeraj. I think one stock which we like is Adani Ports, largely because of their efficient business model. But I would not really right now venture into some of these names. I think while we are happy that the market have risen, I think we still have some few concerns to look at. And I think these are times when stocks with momentum, without fundamentals, and stock with momentum and fundamentals both go up, and one has to now be careful in terms of what we get into. There are enough stories where the fundamental levers are in place, whether in terms of revenue growth, EPS growth, and some of the both the tailwinds and the headwinds. So I'm just saying that one has to avoid that space. Don't get into something which is again high on debt, pledging of shares, something which can have regulatory interventions. I think it's best to avoid.
Okay. So what is it that one should look at now? I mean, while we've got, the market, it's full glory right now to take a play on. But like you said, there are a few pockets that you want to avoid. Which are the pockets that, in no cost should you avoid? And at this point, the growth prospects are that much more intense and higher, so that even if you pay a slight bit of a premium, it's okay.
Yeah. So I think, Devina, I think if you look at the general insurance space, I think that's looking very, very good. One top pick in that space is ICICI Lombard. If you see there are 3, 4. One is it's the most diversified general insurer. So they are into general insurance, they are into reinsurance, they are into insurance, claim management. And it's very, very well diversified. If you see the new MISP guidelines, which is the Motor Insurance Service Pool, it will bring in more underwriting discipline, and there will be uniformity in terms of the dealer, commission. In terms of their risk management, the risk management has been very, very good. They're on natural catastrophic claims. They are at about 6% versus 8% for the industry. In reinsurance, they don't go below A, while the regulatory norm is BBB minus. Also, there is a sustained higher profitability which would come from improved health business, from the change in guidelines on crop insurance now. The model has changed to risk transfer, which is basically on percentage of cover, which means your ticket size of premiums will go up, and the focus government has obviously on crop insurance. So I think there are good levers in place. One can pick that. We already discussed corporate banks. Fast-moving electrical goods, I think, is another area where I think still a lot has to come. The market can probably become 2x, 3x. So your likes of your Havels and some of the other names like Bajaj Electricals.
Well, it's looking solid thus far. Let's wait and watch how much further can we hold. Stay on Gurmeet, stay on Sachitanand as Amar as well. We'll just get back to a conversation with you, but it's 3:15, that time of the show wherein we should get a sense of what dealing rooms are recommending in the session today. Yatin and Darshan are here with their channel checks. Good afternoon, both of you. Yatin, let's start off with you first.
Well, Neeraj, the first stock to watch out for will be Adani Enterprises. Now, if you look at the mid-cap end of the market, stocks which are there in the future and option segment have seen significant traction in the past few days. Adani Enterprises is one stock, and based on the F&O trends, dealers are recommending a buy today, sell tomorrow kind of a strategy. Of course, it's 6.5% already higher in trade today, but dealers do expect the further momentum moving ahead as well. Talking about United Breweries, that is also one stock which is gaining in trade, but dealers do indicate that there is a lot of domestic fund buying which is happening in the counter, and that is expected to continue. So this is one stock wherein dealers are expecting some positive trend to come in from the trading side. And finally, in the cash segment, do watch out for Indian Bank, wherein a lot of HNIs are said to be buyers in trade today. And in general, today we have seen the Nifty Bank hit record highs, banks gaining traction. So Indian Bank is one of those stocks which is active in trade. But Darshan has a few more stocks to talk about.
Yeah, so one of the first stock is Indian Hotels, which has managed to move up almost 5% in today's trade. No doubt from a lot of dealing rooms, I have heard that some of the HNIs are actively accumulating the counter. The trend certainly seemed to be on the positive side. The Ambit report that came out a few days ago did indicate that occupancy levels are actually moving up. So Indian Hotels is the first stock that dealers are talking about. If you see the move that's come in on the Nifty Bank, it's over the past few days, it's been aided by only, ICICI Bank and Axis Bank. But today, some of the other banks like an IndusInd Bank has seen a big move. It's been extremely range bound, but has managed to move in trade today. Kotak managed to move up in trade, HDFC. So some of the domestic funds have now started taking exposure to both IndusInd Bank as well as Kotak Bank. And Havels is trading at record highs today. Dealers believe that the momentum will continue. It's up almost 3%. The trend, according to them, will continue.
All right, Darshan, thanks a lot for that. That is the dealing room check this afternoon that's coming in. Most of these hotel companies, and we've been talking a whole lot about the last few days' performances of some of these hotel companies. We've spoken to managements as well, talking about the increase in occupancy rates, particularly for individual cities, for tier 1 cities like Delhi and Bombay, which now have passed that 80% mark, which entitles them to go ahead and seek more price hikes. That's happened. Today's session, obviously, Lemon Tree looks a little bit bleak, but over the last few days, be it a Chalet, be it Lemon Tree, be it EIH, all of these names have been doing fairly well. Gurmeet, would you be an investor in this space?
Yeah, so we, if you remember, we had this discussion on Indian hotels, a quarter back. Really like this this space, and I think it's the best way to play the. We keep talking on growth in domestic passenger, increased travel, higher spending on vacations. I think it's a best story. I think what they've also done, if you see the management commentary, is that they've shelved the mono brand strategy which they had. I think they will continue to focus on the multi-brand strategy. The occupancy levels are higher. The average tariffs have moved up. They have signed up few properties, including one in Dubai, one in Lucknow. The management is already is focusing on an asset-light model. They have clear plans that they are targeting an 8% increase in margins to about 25%. So I think it's good. And this business is a little cyclical. So you have the next quarter, which is the beginning of which we can call Q1 in terms of our financial year, which is actually the best period for this kind of industry. So positive on Indian hotels. I think this could be a good 2x, 3x stock with a medium to long term view.
Okay, got that. It's just 10 minutes left to go for market closing. Time now to bring in those closing strategies from our technical experts. I'm going to start off with you, Sachitanand, first off.
Well, the first stock would be HDFC Bank itself. The stock has managed to sustain above its 14 weeks of consolidation. It is quoting somewhere close to 21.70 right now. The stop loss for the trade should be placed at 21.55, and the stock needs to be reviewed around 22.10. So this is one particular idea wherein we would like to carry forward our long trades.
Okay. Amar Singh, what about you?
I would say that one can look at Colgate Palmolive, because this stock, if you look at it, the long-term trend technically continues to remain extremely strong for the stock. And the stock did correct from almost 1340 levels, came down to 1200, 1210, and now it's currently around 1280, 84 levels. So this is one stock one can look at buying. So any dip towards 1275, 1280 can be used as a buying opportunity, with a stop loss of 1234 and a target of 1358 on the upside.
Okay, so that's a few names that you should monitor. Gurmeet, what's a good infrastructure stock to buy currently? A lot of these have moved up quite considerably. I know 10 days back, 12 days back, they were well available, wherein the gross profit was equal to the enterprise value. But I think they've moved up from those levels. After the move up that has happened, and keeping in mind that the market has also moved quite a bit, and if that tends to pull back, that these infra stocks will come up, what to buy? NCC, KNR, Sadbhav, what is a good stock to buy?
So Neeraj, I think L&T looks a safe bet in the large cap space. I think it's above 1400 already, and the stock did correct. I think they're on course to meet the order guidance for this year and probably might exceed the 12% band. I think they have a clear divestment strategy in place. There could be an uptick there in terms of the SOTP, which is the sum of the various businesses. I expect L&T Capital, there's already rumor in the market in terms of they actively looking for a strategic partner in L&T Capital. Their L&T technology arm again is quite well, and I think on coming back to the infra, NCC looks very, very good, good order book. The number of days of working capital has come down from more than 200 days to sub 200 days. They are working on the margin profile is better, the order diversification is better. So these are the two names you can look at, and I think what we should also watch out for is how the liquidity flows now. I think you would see, my sense is, and you could see more. So there was an interesting chart I was studying. Last 4 years, actually, if you remove the passive funds, FI flows have been negative. So the active money hasn't really come, and once you have more clarity on a stable government, a better set of fundamentals, even the active money would come. And that I think would be very, very positive for, the infra space as such.
Okay, got that. Gurmeet, while we've been taking a look at these bellwether stocks like L&T, Reliance Industries too falls in that category. The stock now once again looking at making those 52-week highs, 1330 on the counter, and a big contributor to the index doing what it's doing. So 5.5% in a matter of 2 trading sessions for Reliance is big. As a sum of parts business, if you want to probably own a bit of telecom, a bit of retail, a bit of media and oil and gas, is this the best play to get?
At this price, Devina, I don't know if you want to add any incremental positions, because a lot is in the price. Also, I think since you talked about telecom, I think if you see the numbers, I think Jio will be a little more aggressive for coming quarters. So I don't buy into that argument of ARPUs immediately improving. Because I think this Vodafone Idea integration is giving an opportunity to Jio to add subscribers, and that's a clear focus. If you do have a discussion with some of their top management team, but I think it's a stable counter. It would be steady from these levels because the GRM also would be stable as crude is looking to stabilize. The rupee has come down, which is positive for the petchem business as well. So telecom, I think at this juncture, if I were to be a little tactical, I think Bharti looks a little better. The momentum is on the side, and if you break up its revenue, it's over 20,000 crore kind of a top line. 10,000 crores is India Wireless, 6,000 crores is Africa business, and then your digital and home services, which is non-wireless, is the balance 20%. I think if you see their EBITDA, the Africa business is showing now a gross EBITDA of 37%, and which is very, very good. Here it's still at about 20 with ARPU of 105, and they are now differentiating the customers basis ARPU. So they're not really taking into account clients which are below a certain ARPU. And I think its defense of market share has been very commendable in light of what has happened in the industry. So if you want to be a little tactical, maybe Bharti is a better play if you were to play telecom right now.
Well, watch out for that. Thanks a lot for that. Gurmeet, always a pleasure having you. Much appreciate you taking the time out and joining us. Now we're talking about how some of the infra names have done really well. Amar Singh, a couple of slightly lower known names, Man Infra, Crest Ventures. Both of them have done well. By any chance, you can pull them up and tell me, but the last 6 or 7 days, some pretty decent moves for them.
Yeah, looking at Crest Ventures, yes, the stock has bounced back from almost 120 levels. Currently, it's around 145. Technically, I would say on the daily and the weekly charts, it clearly shows that a bottom has been made. And the upside, if you look at the stock Crest Ventures, so it had made a high of almost 157 in January. So that's a level where the stock can retest those highs. So somewhere around 155, 157, that could be a level where the stock could meet with immediate resistance once it starts consistently trading above 148 levels.
Okay. Astral Poly at 3.5% higher is trading at life highs for itself. Sachitanan, 1255 and counting. Is there more upside here?
Which is the name of the stock, you said?
Astral Poly. If you don't track that, then give me a view on Escorts or Bata India.
Well, I think Escorts is something that has been hitting our radar. In fact, the way the volumes and the open interest has been building up, I think the stock still has some headroom left towards 820 odd levels. This is where we see this particular move getting elevated. Probably a stop loss should be placed somewhere close to 765 on a closing basis, and long should be continued in Escorts.
Okay, gentlemen, stay on. So much more to talk about, but let's start wrapping up the markets. And it's been a remarkable day of trade, more so for the large caps and the banks. I must say they're off the highs of the day, but I think as B and Devin were talking, if indeed we would have a 40-50 point off from those levels of 500, I don't think it will deter anybody. This is just one very remarkable move. The Nifty Bank closes at life highs for itself. This is the headline from today's trade, and it's only Tuesday. Look at the volumes, they have really shaped up well today. It's pulled the Nifty and the Sensex along with it, so good close for these indices too. Second on a trot now. We've had good moves, just that the dichotomy is that Nifty Bank is performing much better than what it did in trade yesterday. Mid caps and the small caps, not a bad move. Again, not as great. This is a slightly concentrated move. I mean, HDFC Bank, ICICI Bank, etc. Those are the stocks that have moved up and taken the index up along with it. It's not that everything else has participated, but the broader markets are doing well for themselves. Let me talk about the large caps though. We'll talk about the mid caps and the small caps after that. First in the large cap space, while Bharti Airtel is there at the top, you'll see a splattering of banking names out here. So ICICI Bank 3.5%, IndusInd Bank 3%, HDFC Bank 2%, and Reliance 2%. So these two would be the top two contributors in the session, and then you would probably have an ICICI Bank as the number 3 and Bharti as number 4. But that tells you the story of what's pulled the index higher. However, I must say that there are some losers that have crept into the system compared to what it was at about 2 o'clock. Eicher 2.5%, Bajaj Finance 1.5% lower, Bharti Infratel corrects. HPCL, ONGC, some of the PSUs which have had a fairly good run the last few days also pulled back ever so slightly. So the breadth on the Nifty is a lot weaker than what was the case yesterday. But banks just have had a remarkable afternoon. Devina, not so much for the mid caps, though the small caps have done okay. But again, a bunch of high-flying stocks. Yeah,
like you rightly said, the indices per se, for the mid cap index, we're just up 0.25%. Small cap index is slightly better, so closer to 1% higher for the small cap index. This is how we've stacked up in terms of individual movers. Escorts doing really well, up about 7.5%. Then you've got the likes of Gujarat State Petronet. Most of those Gujarat-based counters in today's session have really done well, and not just today. the last few days 5 to 20% higher. Indian hotels, we were talking about how hotel stocks are picking up. So Indian hotels being one is up 4.5%. Apollo Tyres saw a sweet run in today's session. Edelweiss has been like this over the last few trading sessions. Yesterday was up 6.5%. The day prior to that, too, saw gains coming in. Dilip Buildcon, that big EPC order win of about 480 odd crores that it got yesterday. The management came online. They spoke to us, said that they have an order book backlog of about 24,000 crores, doing well. Yesterday was up 6%. Graphite India 3% higher. Amongst the bigger losers, Apollo Hospitals, the Ivan Housing Finance looks weak, about 3% odd. Jubilant Foodworks though down closer to 1.7%. On the small cap end of the market, that should come up as well. Just to give you a brief idea as to what those stocks have done. Manpasand Beverages 16% today. Another 10% yesterday. So the last few days have been exceptional for this particular counter, and the interest has just been building up. CNG Power is up about 9% odd. You've got GMDC, an order win there. The stock's up 6%. Syntex has moved up on heavy volumes. Last time we checked, the volume was about 16 or 60 odd lakh shares. That would have perked up in the last few minutes of trade. PVR, Trident are some of the other bigger gainers in trade. Amongst the losers, Lemon Tree is down about 5% odd. Allahabad Bank, RCom being a loser too in trade. The overall picture though should come up on your screen with the Nifty and the Nifty Bank, and how the trade for today has shaped up in terms of the advanced decline ratio, the turnover picture that will come up on your screens as well. So that's what we've got on the Nifty Bank. New life high. Did not maintain the new life high in intraday trade, but no one's complaining. You've got 450 points on the Nifty
basis,
Bank.
Devina, this would be life highs for itself for sure. So quite remarkable the afternoon for sure. But you were talking about volumes. I think should pull those up. Let's see if we nudge 40,000 crores. We have. So in both counts, exceptional volume day today.
Almost 41,000 in cash. Yeah, and this is yesterday was about 7. Today was about 10.5. So it's looking strong, and that's reflecting in the FI numbers that we see, over the last few days.
Yeah, the cash volumes are so strong, and I would reckon that the trading volumes too, as exemplified by the NSE volumes, are doing well. The market breadth was good. I mean, 2:1 in favor of the advances, so no points for guessing what's happening there. And the contributors as all, just a bit of contraction towards the end, but still close to 2:1. Yeah. But yeah, no prices for Bharti Airtel has not made it. It's L&T which is out there, but certainly the banking names out there.
Yeah, heavyweights. HDFC nonetheless has a heavier weightage. Reliance Industries 5.5% in 2 days. Yesterday was up 3.5%. Today up to 2%. So it's not just the banks doing the heavy lifting on the index. Reliance too is, that little bit of a push that's coming in towards the end of trade from Reliance. So 145 odd points higher on the Nifty. Closing comments from both our technical experts. Sachitan, will come to you first. A phenomenal close to a roaring start for the indices, for the bank Nifty. What positions can one expect to take?
Well, as we discussed, the underlying strength has been really good. Even if you look at some of the key constituents on the indices, HDFC Bank, ICICI Bank, there are no signs of exhaustions yet. So probably, we may see this particular move getting continued in tomorrow's session as well. The only caveat would be, yes, we are in the overbought zone. So a trailing stop strategy should be, strictly adhered. And the best way to, gauge momentum is, in case of the indices, close below the previous swing lows. Previous swing days low. So I think that will be the first sign of exhaustion, and unless we don't see it, I think there is enough steam in this particular rally, and we may still continue to gallop forward.
What about you, Amar?
I would say that the way Nifty and Bank Nifty both have managed to close at close to the record, the Bank Nifty close to its record highs, clearly shows that further steam, further upside rally is there. But I would say that one should be slightly cautious tomorrow, and I would say that look at booking profits, because for Nifty, one crucial level of resistance comes around 11,340, 350, because we could see some profit booking around those levels.
Okay, gentlemen, just one. Okay, I think you've given us enough details. I think tomorrow will be a new day to try and figure out what happens to the Nifty Bank in particular after the remarkable up move that we've seen today. Sachitanand as well as Amar, thank you so much for joining in today and giving us your thoughts. We'll watch out for the tire stocks, Sachitanand, for sure in the session tomorrow. Leave it at that. Appreciate your time, and viewers, thanks for tuning in to this leg of Countdown from Devina and me and the team that put this show together. Thanks so much for watching. The Market Wrap with Agam Vakil is coming up next. Stay tuned to Bloomberg Quinn Live.